Hey everyone, Rayce Robinson, your favorite Florida mortgage broker. Wow, what a crazy ride here. It's March 18th. Stock market, another big negative day, middle of the coronavirus epidemic. And things are just really crazy, really uncertain. All that's priced into the market. I'll talk about that here a little bit at the end. But first, I want to look at the numbers for February of 2020. And I like to look at compared to last year and compared to last month. So February of last year, we had 8,194 homes on the market. Flash forward to February this year, 6,825. That is so low. I mean, that is just really, really low inventory. On top of that, we had 2,947 contracts in February of 2019, February 2020, 3,600 new contracts. So again, low inventory, but higher demand. And then again, there was 2,400 sales in February of 2019 and about 2,500 in February of this year. And then if you look at last year, there were 3,100 contracts in February, 3,600. So what you see is rising demand. Rates, on average, this says 3.43% for February. Remember, all these rates you see advertised, they're kind of the unicorn with discounts and origination. But in general, what you're seeing is low rates, good affordability as far as that really keeps people's payments low. And really what all this means to me is, man, a really healthy real estate market when you've got lots of demand, you've got low inventory, which is keeping prices very stable, which is really good. With this whipsaw markets, last thing I do is see real estate kind of going crazy like that, and having low inventory definitely helps keep prices in check. The median price right now is about 250,000, 250 to 257,000 in Central Florida, depending on what source you're looking at. And the average days on the market are 58 days on the market, which means homes are selling pretty quick once they're priced right. So again, all that means great housing market. Now, with the coronavirus, definitely don't want to make light of that. It's definitely going to have an impact. A lot of people are losing their jobs, furlough. But I am an optimist. I'll admit that freely. But I really think that we get past this and the markets pick back up. And if you're a buyer and you aren't in jeopardy of losing your job, now is a great time to be buying, because what's going to happen is people are pausing a little with all the craziness and social distancing. So if you can't go out and see a house, you're not competing against all the people that you have been. And in the summer, I think it's going to get really, really busy, because rates are going to be at an all-time low with all the things the Fed did, lowering the Fed funds rate. I'm not going to get into all that in this video, but removing some of the Frank Dodd requirements, they've really freed up the liquidity and banks to lend money. I think rates are headed towards an all-time low. So this summer, I think there's going to be a lot of demand. Again, with the coronavirus, assuming that, things get back to normal, there's definitely going to be some long-term effects. I think there's going to be some long-term effects on the way that American companies do business, with being virtual and some of the things that we're being pushed to. My son is home for school now, and he's having to do stuff virtually. So definitely this could create a shift there as well. We already do a lot virtually with meeting with clients through video, and we use a program called BombBomb, where we do a lot of video kind of emails going through the process, and it really kind of makes it personal in a world where everybody's so busy. So again, my prayers go out to everyone. Definitely not making light of that. I mean, we're all feeling the impact, but there's a lot of uncertainty. Of course, that's all priced in the markets as you see things just whipsaw up and down, mortgage-backed security stocks. So as far as the numbers go for this, obviously February's numbers don't have nothing there on the coronavirus. I think we'll see that really not even in March, but in April, May. So I am curious to see how all that pans out. Again, my opinion is super healthy market as far as with the low inventory, low rates, and demand. Even though that demand may diminish for the next couple months, I think you're going to see a really robust housing market. Of course, refinances are through the roof. So if you have any questions on this or anything else, let me know. What we do is easy, simple, easy to understand, transparent mortgage advice, no lender fees, just the best deal on a mortgage, period. So if you have any questions on this, the numbers, loan programs, God, there's more than ever. Reach out to me, text me, email me, Facebook message me, whatever. More importantly, let me know what I can do to help. Thanks.